Mr. Steele, your local real estate agent here in DFW, and today we have breaking news. Obviously, I am talking about the China and US trade deal. Let's jump into that real quick and see what we are talking about, what they're saying, and what it means for you. As always, this is not financial advice or legal advice. Let's watch this quick clip together, and then I'm going to dive in on some of the details and what all this means and keep it real simple for y'all, okay?
We have reached an agreement on a 90-day pause and substantially moved down the tariff levels. Both sides on the reciprocal tariffs will move their tariffs down 115%.
All right, so there you have it. There's a 90-day pause, and both sides are moving down by 115%. So what does that mean? I'm going to give you my 2 cents. A lot of people are talking about this. So just to break it down, the numbers, right? China was at 145 and America was at 125. China is moving down to 30% and America is moving down to 10%. So this is good for a lot of reasons. And I kind of expected this the whole time. I went into other videos where I was kind of talking about this and saying, I did not think these tariffs were legit or going to hold. This was a negotiating tactic, posturing. Both sides want to be in a position of power. And after watching the China announcements last night and the U.S. announcements last night, even before they went into the details of the trade deal, it was very positive. This was very professional, very respectful. We're going to have really good news for you tomorrow. That was what both sides were saying, okay? So this deal was handled well, the negotiations went well, and it was civil. So I just don't think a lot of people, especially the media, have been giving this administration its flowers and enough credit for how it actually operates. Again, this has been the tariffs, and Trump's demeanor, I know it can be bombastic, but this is very typical negotiating tactics, okay? You can just skim the art of the deal by Trump and you can kind of get a pretty good idea of what he was doing here. I never once expected these tariffs to actually go into effect. And a lot of people have been behaving like this. The Fed, Jerome Powell, there's a lot of people who, well, I don't know, Trump could mean it. Well, I think, right? But obviously that's not what happened. Okay, this is great news. This was handled very professionally, very cordially. And so what does this mean? Well, the 90-day pause just buys us, 90 days, which is great. That's going to let the markets kind of, reacclimate. I think we're going to get a big bump. And then the 30 and 10% are way more realistic. You're not going to most like at a 145 and 125, that was unsustainable. Yes. When Jerome Powell was, I don't know. We got to wait and see. These tariffs are going to cause massive inflation. Well, yeah, obviously if these had gone into effect, there would have been a lot of inflation. And so I personally think that what you could see is, you could still see those rate cuts. Now you have Jerome Powell and the Feds have less reason to hold off on rate cuts due to the risk of inflation, because 30 and 10% are probably not going to cause anywhere near as much inflation, if any at all. And these are going to actually be really good. I mean, this is going to eat up some of the trade deficit between U.S. and China. That's good for us. China's getting a little cut. I mean, these are reasonable, tradable percentages that work for everybody. And both sides seem very happy. And again, I think the overall best good news here was how this was handled, how both parties are, speaking about each other, the cordialness, the respectfulness, the professionalism. Both sides seem very happy. Both sides got a deal. It seems to be a win-win for everybody. Now, as far as real estate goes, if you are looking to buy a home, you probably should move quickly, because if and when, now that Jerome Powell doesn't have to worry about this 145 and 125%, there's a much greater chance of cutting rates in the future, especially this year. I could absolutely see it. They just don't have any excuses now not to cut rates, at least not as many. I mean, especially over the next 90 days, you don't even have any tariff percentages between US and China. So yeah, absolutely. I could definitely see a rate cut or two this year in the future again, and that would potentially cause a lot more buyers to come to the market, which is going to create more competition, which could, you know, directly impact pricing. You could see pricing go up. So if you are a buyer and you want to buy a home, now is the time. You do not want to wait 6 to 12 months, and you definitely don't want to be buying 5 to 10 years from now. If you are buying a home and you've been on the fence about it, run, do not walk. This is going to be a time where people are going to go, man, I wish I'd bought in 2025 when the markets were down, when buyers had negotiating power, when people were cutting prices, 20 to 60K on houses, even here in DFW. And again, I mean, we have held strong, even not being in a great market. Last month, the city of Fort Worth had more closings in the month of March than any city in the nation. We are a hub. This is a great place to sit your money. Real estate is an amazing asset. You need to hedge yourself against inflation and money printing. They're devaluing the dollar. They're not going to quit making money. And inflation is here to stay. I mean, prices are going to continue going up. So if you own assets, you love inflation. Inflation's your friend. People who owned assets during COVID won. They had big wins. People who had 2K under their mattress and 4K in the bank, savers or losers, they lost their ass, right? Because their wages did not go up much. The cost of living, the cost of products and services all went up, right? The cost of a house, the cost of a car, it all went up. Assets went up, right? And so if you're living paycheck to paycheck and you're trying to save your way out of this new economy, you are not going to win, okay? Savers are losers, right? You need to sit your money in assets. Real estate is one of the first major assets the average person can get involved in, which is why I'm so bullish and so excited and love real estate so much. There are so many programs, first-time homebuyer programs, FHA loans, to help regular people buy their first home, okay? You're much better sitting your 10 or 20K that you have on your mattress and in the bank combined in a house, because that house is going to go up significantly over the next several years. Okay, it's going to protect you from inflation. It's going to be a way better hedge for your money. Even if you're in like a 3 or 4% high yield checking account, which is probably the most you're going to get, most of the time, that's not even really protecting you from inflation. You're not even breaking even. Okay, because again, like groceries and stuff like that, like the feds are saying 2-3%, but like those things are typically at like 5, 6, 7, 8, 9%, or sometimes double digits. So real estate, if you're looking to buy, you need to run. Okay. If you're looking to sell, the good news is very soon you're going to be in a much favorable market. I mean, I think we're literally in the midst of this shift. So that's going to happen in real time over a short period of time, over the next several weeks to months. I think at some point in the summer, you are going to be in a much more favorable market as a seller. And especially if they we get a rate cut maybe in June, as early as June, you're definitely going to see a lot more buyers coming to the table, and you're going to start to see more competition, which is going to be great for you as a seller. So good news, if you are looking to sell your property or your house, you're going to be in a much more favorable market very soon. To wrap this up, I wanted to talk about, I think I'm going to start, integrating some crypto talks. I do crypto and love crypto as well. And again, I like crypto for the same reason I like real estate. It's one of the few assets that's easy for regular people to get into quickly. It is very volatile, but you can make a lot of money, and it is the future. And so my next episode, what I really want to talk about, I've been doing a lot of research on, is actually a combination of how crypto and real estate could potentially combine in the future in a certain way. And it's called tokenization, right? It seems like there is going to be a tokenization of real estate in the future at some point. And that is fascinating. It's a super interesting topic. I think the real estate industry as a whole is very archaic. If you have ever bought or sold a home, you can definitely see how archaic things can be, how slow the processes work, how chaotic. All the parties talk together, from title to lending to inspections to, the buyers and sellers. There is a lot of archaic disorganization and chaos, and tokenization, which is the digitization of assets, digitizing real estate, is super fascinating and could definitely shake up this industry and be very interesting. So I'm going to be going over that in my next episode. So if you're interested in checking that out and hearing about that, make sure you check the next episode out because it's going to be super cool. And I'm going to go into that and break that down. And so there you have it, guys. That's the big news for today is the U.S.-China trade deal. Super big news. Again, if you're looking to buy, run, do not walk. If you're a seller, the good news is you're going to be in a good market around the corner. And don't wait for those interest rate cuts to buy, guys. You can refinance later on. Okay. Seriously, y'all, do not wait. Buy in a better market, save up front on your pricing, and then you can refinance later on because rate cuts are not guaranteed. Maybe they don't happen at all. And if they do, okay, cool. Well, just refinance later on and you get your cake and eat it too, because a lot of that interest is not going to be realized. That interest is paid over time, over the lifetime term of the property. Make those interest payments for the first year and then refinance it. And now you get your cake and eat it too. If you save 20 to 60K on the front end of the property, right? And you get in at a much better price point, and then you refinance shortly and pay off that first mortgage, whatever the rate is you got initially, and you get an even better rate. You typically save on both ends. So there you have it, guys. That's what I'm thinking. That's the good news on the China trade deal. I hope you found this fun. Please like and subscribe, comment below, and I will see you in the next one. The next one, tokenization of real estate. Crypto and real estate meet. Check it out. Peace.